Richard Dennis, one of the world famous trader and the founder of Turtle Trader, once he said, "We could post our trading rules on the front page of the Wall Street Journal and still people would not be able to make money from them." Why? Because trading is not only about strategy, trading is also about mindset. As you know, statistics says that 90% of traders they lose money in trading. It is not because of 90% traders are uneducated or unintelligent. In fact, most of the traders are doctors, engineers, IT professionals, MBA graduates from the top university. That means they are intelligent. But when it comes to trading, they fail because trading requires different kind of mindset. That is why normal people fail in trading. The same mindset which made you successful in your career, made you topper in your university, same mindset will destroy your trading account. That means the mindset should be different when it comes to trading. And that is what the objective of today's video, where I'm going to discuss few points where I'll show you what kind of mindset you need to become a successful trader. And whatever the points, concept which I'm going to discuss in this video is taken from this book. That is the Trader Mindset, How to Fix Fear, Greed and Emotional Trading. This book I have personally written and it was already launched, and I discuss many points, many concepts in much more details in this book. And if you are interested, you can go below this video and you can buy this book. Now let us see what are those points. And the point number one is, first you have to unlearn everything whatever you learned till date. That means whatever you learned from your parents, whatever you learned from your school teachers, everything you have to unlearn when you come to trading. That means when you are in school, you are always taught that you have to be always right? When you make right answer, you will be the topper. When you make a wrong answer, you are a failure. You have been taught to be right each and every time. So that is why being right is embedded in our mind and we think same thing in trading. Second thing is that about the money. Money, you know that parents, elders, everybody in your home always told you about saving money. Don't waste money. Money is very important. Losing money is a sin, right? That is why since our childhood, we have become very emotional about money. And that is what trading requires different kind of mindset. That means in the school, they say that you have to be right, but in trading, you can be wrong 50% of the time. Still, you can be a profitable trader provided you follow risk reward. And second thing is about the money, because in school they said you should always save money, you should never lose your money. But in trading, small losses are part of trading and you are okay with losing small money in trading. So that is what happens when you are trading in front of the screen, that your childhood lessons start running in your background. When you take a trade, when trade is going wrong, you get upset because you have been taught that you should always be right. So you start fighting with the market, doing revenge trading, averaging to losing trade, everything. And another thing is about losing money is bad, right? We have been taught that money doesn't grow on tree. You should not lose. And trading, what you do, when you see that your trade is going against you, you start doing revengeful trading to recover your losses and you finally blow up your account. So first step is to become a successful trader is accepting you can be wrong 50% of the time, still you can be a profitable trader. Second thing is that small losses are part of trading and you should be okay to accept small losses in trading. And now second point is you should always trade what you see, not what you think. That means you should trade what you see on the chart, not what is going in your mind. Okay, now let me give you an example of what I mean by you should trade what you see, not what you think. For example, this is the Nifty 5 minutes chart. You can see that Nifty opened here and after that it made a strong up move and finally it came near the strong resistance and it started making consolidation. In the live market, you can clearly see that there is no breakout. It's only making consolidation. Being a price action trader, you know that breakout is only valid when there's a big green candle breaks like this. You already know that. But your subconscious mind takes over and start making story saying that take a long trade because it is going to make a breakout. Even before making a breakout, your subconscious mind comes into the conclusion saying that it is going to make a breakout. That means you don't go with whatever you are seeing here. Clearly there is no breakout yet, but you will take a long trade because that is what you think, because your subconscious mind is saying you. And then what happens? Instead of going up, it starts coming down. right? So that is what I mean to say, you should trade what you see, not what you think. That means when it comes to this resistance making consolidation, that is not a place to take a long trade just because you think it is going to make a breakout. Okay, market doesn't go up and down because what you are thinking. So what you should do, you should trade what you see. When you see this chart, you can clearly see that there is a big bearish candle. Instead of making a breakout on the upside, it is making the breakdown on the downside. Now instead of taking a long trade, if you have taken a short trade, then you could have made profit in this trade. So that is what you should have, a control on your subconscious mind, so that you will not trade what you are thinking, rather you are trading what you see on the chart. And that subconscious mind which forces you to take all the trades without even having the setup. That means our subconscious mind have a tendency to jump into the conclusion the moment you see the chart. That means even though there is no breakout, it will tell you the stories saying that there is going to be a breakout. Now I'll do a small exercise to show you that how powerful is your subconscious mind. Okay, we'll play a small exercise here, and after this exercise, you will understand that how fickle is our human mind is, how it comes into the conclusion within seconds before what you can clearly see from your eyes. After this exercise, I am very much sure that you will understand how your mind tricks you in live market to take a wrong trade. Okay, so this is a very simple exercise. I'll show you some figures here, and what you have to do is loudly you have to say the color what you see, only you have to see the color. Okay, so again I am repeating, the moment you see the color, whatever comes to your mind, you have to say it loudly. Okay, let me play the color now. I know many of you said it is red, yes it is yellow, yes it is green, yes it is blue, yes it is black, yes it is gray. All right, very simple. That the moment I shown you that within fraction of seconds, the moment you seen it, it came to your mind and you said exact color. Now next slide is going to be very interesting. Next slide is going to be very tricky. Okay, and rules stay same. What I said, I'll show you some figures. You have to see only colors, and whatever the color comes to your mind, you have to tell it loudly. Okay, let us start. Wrong, you said red, right? It is not red, it is black. It is not yellow, it is red. It is not green, it is blue. So can you see that how your subconscious mind is tricking you? Even though I told you that you have to see the color, but still your subconscious mind came into the conclusion without seeing what is the color, right? This is not blue, this is yellow. And this is green, and this is black, not white. So this is a small exercise. You have understood now how you only seen the figure, you have not seen the color, right? That is your subconscious mind, which immediately came into the conclusion to say which color is that. Even though I clearly mentioned that you have to see only color. That is what, after that it has become little bit easier, right? After 2-3 mistakes, it became easier. Let us play it again fast. Yes, black, red, blue, yellow, black, sorry, it is green. Even I made a mistake, it is black, right? So that is what you have seen, that slowly it is becoming easier for you now, because now you are putting your conscious mind into the play. Earlier it was only subconscious mind, now your conscious mind. So that is how you have to control your mind during the live market. Okay, this is what I wanted to show you, how fickle as well as powerful our subconscious mind is. Next point is, best loser wins in trading. In school and colleges, you always know that always there is a prize trophy for winners. Whether in school, whether in college, whether in your career, everywhere in life, best winner gets the prize, right? But no one asks about the losers. But in trading, it is opposite. That means more than a winner, you have to be a best loser in trading. That means taking small losses without your emotion, without the ego, is one of the very important in trading. Okay, I said in trading, best loser wins in trading. Okay, for example, see here, I given an example. On one side, you can see trader A and another side trader B. Okay, First, let us look at the trader A. Trader A, you can see that he is making big profit, right? 65,000, 73,000, 90,000. It looks huge profit, right? And at the end of the month, even though his profits are big, but since his losses also big, he is ending his month at 65,000 in minus, right? I have taken 10 trades example for trader A. You can see that even though he is making big profit, but since his losses also bigger, he is ending with negative. Now what about the trader B? Trader B, you can see that his profits are not big. 25,000, 33, 26, 43, 32,000. Smaller than whatever trader A is making profit in a profitable trade. Trader B, at the end of the month, can you see that even though his profits are smaller than trader A, still he ends the month at 95,000 profit. Why? Because look at his losses. Losses are smaller, right? Where trader A profits were bigger, but losses also were bigger. And who wins here? Trader B wins. That is what best loser wins. That means how good you are as a trader is not based on how much profit you make when you win. It's all about how good you are as a loser. That means how fast you cut your losses. That is the concept of best loser wins in trading. It is more like a boxing championship. When a world class boxer comes to the ring, he will not start hitting his opponent from the round one, right? Initially, he will be okay to take small blows on his body, and when the right moment comes, he gives one big blow and he wins the fight. Same thing in trading. You should be okay to take small losses in trading, and when the moment comes, you should win big. That is what called as best loser wins in trading. Next one is accepting the uncertainty. Let me give an example of fisherman. Fisherman gets up in the early in the morning, he prepares his net and he goes to the sea, and he follows the same ritual every day for years. Before going to the sea, does he know that how many fishes he is going to catch? He doesn't know, because he knows that it is not in his hands. He has accepted one truth, that is, sea decides, not him. Same for traders. When a market opens, don't come to the market with daily target that this today I have to earn this much money and all this, because market doesn't owe you anything. Market doesn't care whoever you are. Market doesn't care whatever your designation. Market doesn't care even though you are a topper in your university. And that is why you have to accept the uncertainty. Same thing like a fisherman. He doesn't know before going to the sea whether he will get the fish or no. Sometimes he comes back in the evening with lots of fishes, but sometimes he comes empty handed. And the day when he doesn't get the fish, does he curse the sea? No, right? Because he has accepted the uncertainty. And that is how, being a trader also, you should be ready to accept the uncertainty of the market. Next point is thinking in the series. Think about one of the greatest batsmen of all time, that is Sachin Tendulkar. Sachin Tendulkar has not become world greatest batsman just because of one or two innings. He has become greatest batsman after playing hundreds of innings, right? And in that hundreds of innings, it doesn't mean that every match he has scored 100. Many series where he has failed. Many times he got out in zero. Many times he has streaks of low scores. But when you take the series of hundreds of innings, his average is one of the best in cricket. When he was going through low phase, that means he was failing again and again, going through the streaks of low series, did he think that cricket is not working out for me, let me leave cricket and let me become a badminton player, or let me become a tennis player? No, right? He did not think that he should leave cricket and think about some other sports. So he trusted his process, he trusted his skills, he continued giving his best, and that is how he became best batsman. Same way in trading, when you apply some strategies, you should not leave that strategy just because 2-3 stop losses hit, you think that that strategy is broken. It doesn't work like that. If you want to know any strategy whether it's working or no, you have to give minimum of hundreds of trades. That means after taking hundreds of trades, if it is still not profitable for you, that time only you can think about changing the strategy. Because just like in cricket, how any good player can go through the losing streak where he can score low scores, same way in trading also you should be okay to have the losing streak. That is why in trading also, any strategies you should think in series, not just think about just 2-3 trades. Next point is trade what you are, not what you see on social media. For example, some big trader on social media is trading based on option chain open interest analysis. He doesn't follow chart, he follows the data and he is successful. Doesn't mean that you should follow the same thing. And another way, you see another trader who is very good in price action, he follows charts and he trades based on price action. Doesn't mean that you have to also become a price action trader. You have to ask yourself which suits your personality and you should follow that. Same way, if somebody is successful as a scalper, doesn't mean that you should also become a scalper. Somebody is successful as a swing trader, doesn't mean that you should think about becoming a swing trader. You should ask yourself what suits your personality and you should follow that. That means somebody who likes fast pacing trading, like scalping, day trading and all this, if you think that that is what suits your personality, then you should think about becoming day trader or a scalper. But if you think that fast pace of trading doesn't suit your personality, you think that you have lots of patience, you can wait for the setups to happen for days to weeks and you can hold on to trade for days to weeks, then you should think about becoming a swing trader. Don't become a scalper or don't become a swing trader just because you see a trader on social media and you also want to become like him. You should ask yourself which suits your personality. That is what called as trade what you are. Next point is you should accept stop loss as part of business. Assume that you have a restaurant business. You know that there are many expenses. You have to pay salary to your staff, you have to pay the electricity bill, you have to pay for the raw materials, you have to pay many things as an expense in any business. But in trading, we don't have any expense, right? We don't have to pay the salary, we don't have to pay for raw materials, we don't have any big expenses like that except the internet bill, which is very small, right? So that is why when your stop loss hits, don't take it as a personal failure, don't get upset, don't take as an insult, accept your stop loss as a part of the business. That is the mindset you have to change, not as a loss but as a part of your trading expense. So when you run a restaurant business, you will not get upset when the electricity bill comes. When you have to pay the rent of your place to the landlord, you will not think that, oh, I have to pay the rent every month, right? When you have to pay the salary to your staff, you don't start getting upset that you have to pay the salary, right? Because then only you can run your business when you pay the salary. Same way in trading also, you should take stop loss as a part of your business expense. And just like a business, it can run only when you pay for the expenses. Same way trading also, you should be ready to take stop losses, then only you can continue as a trader. Next one is practice makes permanent. You must have heard of this saying, practice makes perfect, right? That is right in real life, but in trading it works opposite. Whatever you practice regularly, it becomes permanent in your subconscious mind. Whatever you keep doing in trading, that gets stored in your subconscious minds, and subconscious minds repeats what it is told. That's why you keep seeing that many traders say that I know that I should not do revengeful trading, but once market opens, I don't know what happens. I start taking revengeful trading, over trading, and I end up losing capital. So that is because you have practiced so many times that it has become permanent. Even though if you want it, you can't change it because it has become permanent in your subconscious mind. So you have to break that circuit. Something like whenever your stop loss hit, you walk away from your trading desk instead of revengeful trading. If you keep practicing that, that get registered in your subconscious mind. And same way, instead of booking your profit too early, if you hold on to your winning trades until your target met, and if you continue that slowly, that becomes permanent in your subconscious mind, and you slowly see that there's a change in your trading style. That is what practice makes perfect in real life, but in trading, practice makes permanent. Next point is thinking in probability. It is just like a weather forecast. Assume that you have to go somewhere outside. You check your mobile and you see that there is a 70% of the rain that day. What you do? You take your umbrella and you go outside, right? Because there is a forecast of 70% of the rain and it really starts raining. What you do? You open your umbrella and you will protect yourself. But what if there is no rain even after 70% of the forecast? Do you start cursing the sky? Do you start cursing the forecast predictor? No, right? Because you already know that weather forecast is a probability, it's not a guarantee. Same thing in trading also. Whenever you take the trade, remind yourself it is just a probability, there is no guarantee. And all these points which I have discussed till now, everything is covered in this new book, that is Trader's Mindset. All these points covered. Along with that, there are many points, many techniques I have covered. how to train your mind to trade without fear, without greed, and without emotion. If you are interested to purchase this book, you can check the link below this video in the description section. So that's all guys from my side. I'll see you soon with a new video. Until then, bye and trade safe.